to be trying to understand what that really means, and we've got a panel that can look at this from a number of different perspectives. Meg Starr, Global Head of Impact, Carlyle Group, so the private equity perspective. Alan Haywood, Senior Vice President for ESG at BP. Obviously, the energy industry itself is central to this question. And Ignacio de Calonje, Chief Investment Officer and Sustainable Finance Lead for Global Infrastructure at the IFC, so the International Financial Institution perspective. So why don't we start with you, Meg, and ask, you have this portfolio as a private equity company. How does Browning the green economy fit into that, where you have a whole range of companies? What's the way that you look at this issue?
Sure. Thank you for having me. My name is Meg. I look over ESG and impact at the Carlyle Group. And I think in this field, we like to default into binaries a lot. That is a green investment, that is a brown investment, that's a good guy company, that's a bad guy company. And the reality is we don't live in a binary world. And so when we look across our portfolio, we have around 250 companies at any point in time. And I like to say that there is an easy way to go net zero as an investment firm, and there's a hard way to go. And the easy way to go is we did the analysis of carbon exposures across our firm, and we found that, if we divested, say, a dozen of those companies, we could reduce our emissions 95% on paper, and not a single molecule of carbon in the atmosphere would change. But I think when we fall into this default of saying we want to be able to say that, like, we're green or we're not, that we are kind of being forced into this easy path of emissions reductions on paper. And I think the reality of what we see is that we need every single sector of the economy to decarbonize if we're really going to get to a net zero world. And that takes a lot of time, a lot of capital, and a lot of expertise. And so I think our focus has been on how do we think about greening the economy as change over time versus a static state that is an aligned company versus that's not an aligned company, because I frankly think that's the best role that private capital can have in terms of actually driving decarbonization.
So that makes an awful lot of sense, very logical, but it also implies surely a degree of measurement that is crucial. So if you're tracking it over time, if you're going to be transparent about it, and you're actually going to exert a certain amount of pressure and have the metrics to do that, you have to start implementing a degree of measurement across the board. So how does Carlyle go about that?
And I would actually argue that what matters is not portfolio level emissions, which is something we focus on a lot. What matters is individual company emissions and what that trajectory looks like. Because portfolio emissions should bounce around over time. We're constantly acquiring new companies and divesting companies. And I would rather us be able to invest in carbon intensive companies as long as our game plan is to reduce that carbon intensity. So I think that carbon delta is what matters. But the short answer to your question is it takes us a lot of time to even get that baseline data with our companies. Our European buyout portfolio, which is kind of our most ESG mature companies, in 2018, only around 35% of those companies even knew what their carbon footprint was. We've gotten that up to 100%, but it can take like dozens of hours of, we call it the carbon therapy.
But that surely is in itself, if you bring that expertise and you say, look, here's what you need to do to measure properly, that's in itself something you're adding to the...
Yeah, it's capacity building.
Yeah. And so are you finding that over time, that is starting to build up, that more of the companies that you now buy are getting savvier about this? Is the world changing in that way?
Completely. And actually, I have some teammates in the audience. We had a portfolio company in our office yesterday saying, like, great, give me the shopping list of how to even go find this data around my company and I'll bring it back to you. But we're at this inflection point of people need the expertise and the carbon wizardry to know how to get that data and use it. But we cannot skip to the end point of decarbonization if we don't have that baseline.
Yeah. Now, Alan, BP, I mean, in a way, ahead of its time as a company of sort of beyond petroleum, but it's taken a long time to sort of get that message absorbed. And it still sort of slightly blows my mind, what does net zero mean for a company like BP? So perhaps you can explain, how does it work?
Okay. Well, the first thing I'll start off with is to recognise the world which Meg talked about, that it's not a binary world. I think the energy transformation which the world needs, is a transition, and we need everybody participating in that. So, I mean, we as a company, set out an ambition in February of 2020 to be net zero, and that really means in a world where the carbon budget is finite and is counting down rapidly, we need to take commitments to reduce carbon. Now, that means we need companies who are into renewables, who are pure play renewable, but we believe that that alone is not sufficient. That we need companies who are associated with perhaps more traditional energy, the hydrocarbons of oil and gas. Those companies need to transform themselves. And they need to transform themselves both in taking carbon out of their production, so decarbonisation, but also very significantly creating the alternative. And that combination of reducing carbon, perhaps not producing it in the first place, and actually we have an intention to reduce the oil and gas that we produce over time. We say 40% less production by 2030. So a combination of producing less, decarbonising through measures such as carbon sequestration, and also increasing the investment we make in alternatives. Because for the world to transform, you need to give the consumer the alternative to switch to. When you put all of that together, that ambition is net zero. So we're looking to decarbonise our operations, we're looking to decarbonise the production and effectively the carbon associated with the oil and gas that we produce, and also to create that alternative. And it is a net because there are some sectors in the economy which will be much harder to abate, and there will be a need for other measures such as offsetting. But we've said, very importantly, we have the capability to decarbonise through measures such as electrification, through the use of renewables in our operations, but also in creating those new energies, hydrogen, biofuels, renewables, and electric vehicles for charging. So create net zero, that's the ambition, and that's what we're about.
Can you give a sense of the sorts of decision that is actually changed by that vision? So, the investments that you're not making that you might have made in a different world, and investments that you are making because you've set that strategy.
So we've been very clear in terms of where we want to put our funding. Now it's going to increase over time. We made a commitment that we would, by 2030, increase by tenfold the capital which is going into new energies. We've talked about 40% of our capital in 2025 being into transition and 50% in 2030. And the sorts of decisions that we're taking differently are saying we will put hurdle rates on, for instance, oil, which is different from the hurdle rate for return on gas, which is different from the return that we're looking for in renewables. So an oil project, because there is need for oil in the short term, there is need for oil even in 2050, but it's a declining volume. And therefore, we need to have more stringent hurdles to ensure that a reduced volume is achieving the sorts of returns in a probably lower demand world. We're also saying that an oil project needs to pay back more quickly than, for instance, a gas project, and definitely more quickly than a renewables project. So different incentive structures within the company. And then the third dimension that I would say is, very importantly, we apply a carbon price. A carbon price which is increasing over time. By 2050, we're talking about $250 per tonne. So that carbon price assesses the viability of these projects over time.
Well, it's fascinating that this is really happening to your industry. I might ask you in a moment about whether it's happening across the industry. But first, Ignacio, tell me, for the multilateral institutions, you're helping to prod, to nudge, to set framework. What's the most important thing that you think you can do to push this along?
So I suppose what we're doing, a few things. One is we're establishing the rules of what we can't do. And what we can't do is continue to invest in projects which are not aligned with the Paris Agreement. So by 2023, 85% of all our investments will be Paris aligned. And by 2025, 100% of our investment will be Paris aligned. So we have, and we already are implementing screening criteria for each investment to say, is this investment preventing the transition of this particular country or economy to the Paris objectives? And we're doing that from a mitigation, but also from a resilience adaptation perspective. So that screening is already in place, and that, as a result, things are getting rejected for that. The second thing we're doing in a more positive light, I would say, is looking at companies and engaging companies in a more fundamental strategic way. So we can't just be receiving sort of the sustainability strategy or targets of companies and just accepting those. Well, our ambition is to actually get into the kitchen with the companies and going, well, let's open up this sustainability strategy, your targets. Let's understand how you benchmark against your peers. Let's see if there are other options that you can look at. The second element is when we're financing them, provide those incentives. So where sustainability linked financing, where we have a margin step down if they meet their objectives, or margin step up if they don't. And the third thing that we're doing is actually working with them to implement their strategy and those targets. So whether it's a port operator, we will say, well, let's look at whether we can electrify all your cranes. Let's do a feasibility study with you. We'll co-invest on that. So actually seeing, not only looking at strategy, financing, but also implementation of the strategy and working in true partnership, because it is a journey. It's not black and white. It's not tomorrow that's going to happen, but it's engaging. And I think the third thing I would say is, this energy transition is a complex issue. You can't just be talking to the renewable company. I mean, particularly in the markets that we operate in, emerging markets, you can't put 1 gigawatts of renewables in Senegal and just think it's going to happen. You need to have to look at the reliability of the grid. You have to look at what is the base load come from. You're going to have to look at affordability issues. So what we're trying to do is also engage with governments and private sector to say, look, there has to be a holistic approach about this. You can't just invest in a renewable farm and think you're done. And that's what we've done a lot we've done in Zambia and Senegal and lots of other countries. And I can talk more about what we're doing in both the solar space and offshore wind, etc. But it's that holistic system approach that is required.
Because you have the whole picture as well across countries and across industries, you're also in a position to say, well, actually, this isn't good enough in certain cases. You've got the sort of the benchmarks, I suppose. What can you do in those circumstances to push harder?
Well, if it's the company level, there are two types of companies. There are companies who are just doing it for the gallery and basically don't believe what they're doing. In which case, if we tell them it's not good enough and they're not willing to work with us, then frankly we can't invest in them. I think there are other categories of companies who do want to do the right thing, but maybe they don't have the capacity, they don't have the knowledge, etc. And there we will work with them. So we do actually help them to do the baselining. We will help them to do some benchmarking against their peers. We actually organize exchanges between companies. So we have a water company in Brazil. We'll bring in a water company from the UK and from other places so they can come together and say, well, sharing experiences. So it's really that capacity building for those who want to do the right thing, which can really unlock opportunities. Because again, it's not only about managing the risk, it's the opportunities. And I think the more enlightened companies can see those opportunities. Logistics, for example, companies that we work with, they can see that their clients want a green supply chain. So they can see that business opportunity. If you are able to decarbonize your operations, then you'll gain more business. So I think it's really working alongside in partnership with those companies.
So if you step back a bit, I mean, I was struck this morning, for those of you who are here, Alok Sharma talking about, well, now's the time for delivery. There's a sense that there's a lot of people, I would guess, who are coming to this event today are fully with the program, as it were. And yet, globally, we're well short of where we need to be, and things need to move a lot faster. So I guess the question is, how do you, where could things be moving faster, and where do things need to move faster? Perhaps start with you and then...
So I think a big part about moving faster is understanding the issue. Mm-hmm. So I think if governments, companies don't understand the issue, then they might try to move forward fast and get it completely wrong and be counterproductive, or they may be paralyzed in their decision making. So things that we're doing very practically is, for example, offshore wind. So offshore wind obviously has taken off here in Europe and North America, etc. But in emerging markets, it's still lagging. So we have a program to work with a dozen emerging market countries to actually say, how can we help you accelerate your offshore wind program? How can we help you look at the regulatory aspects? How can you do wind studies, make sure it's bankable, make sure that those wind projects will be integrated into your grid? And so we're actively doing that. And as a result, create auctions with bankable projects where the likes of BP will hopefully come in and again, produce gigawatts of offshore wind in the Brazils, Vietnam, Philippines of this world.
So we are about producing.
I mean, and not just,
offshore
I
wind.
don't mean just BP, I mean the industry generally, because you're obviously at the heart of this process as an industry.
I think that the thing we need to do is just frankly be in action. Now, what can speed up some of those actions? I mean, clearly, permitting, for instance, and building out some of the infrastructure is important because there is an element of, I guess, chicken and egg in all of this. In order for the consumer to convert to, let's say, electric vehicles, we have to build out the infrastructure, and people have range anxiety. That is why we're, committed to installing fast charging and ultra fast charging on our retail sites. Because we want to encourage people to make that move. But I think, part of it is saying, let's all be part of the conversation. It is, I think, essential that we recognise it can't happen overnight. It does take all of us, and we need to collectively be in action. To the extent that we can achieve support, and it goes a bit to sort of the non-binary question, financing is critical in all of this. So having people recognise not only the need to finance green, but the need to finance the transition. Mm-hmm. And by transition, I am talking about things like carbon sequestration. I am talking about hydrogen. Yes, the green hydrogen, which comes from electrolysis of water, but also the blue hydrogen, which comes from natural gas. There are sort of projects which we need to take. Biofuels is another example. They may not be the ultimate destination, but they're certainly part of the journey now.
Is the technology properly there yet for the sort of carbon capture and storage and that kind of thing? So
one of the things which was important to me in our strategy is that we should be thinking about known technologies. Now, clearly there will be technological improvements. There'll doubtless be some new technologies, but when we made our commitments as to what we wanted to do, it was based on capabilities which we had, which we knew existed in the industry, which we could act upon now. Now, one of the things which will happen in some of these newer technologies is as scale comes in and practice comes in, we'll drive the costs down. And I think that is part of the purpose of a company such as a BP. There's great innovation, but we also need almost industrialization of those processes. And a company like BP, so you talk about the peer group, with scale, with skill, can apply that to these opportunities and sort of move things forward at pace. So we take something like offshore wind, and for us, we have experience offshore, tends to be in oil and gas. We can redeploy much of that capability into offshore wind, and that's why we see Aberdeen, for instance, converting from an oil and gas hub into a wind hub, and we have cooperation with the city of Aberdeen around the usage of some of that electricity. And I think redeploying skills not only accelerates the process, but obviously it supports, I guess we call it the just transition, but ensuring that people who have been engaged in the oil and gas industry have a future in the new world.
And Meg, for you, what's the what could make the biggest difference, I suppose, in pushing things, putting the foot on the accelerator?
I think sometimes as an industry, we are our own worst enemy. There was recently a vitriolic debate online in the ESG world about the difference between the terms ESG and sustainability. And I wanted to scream, the world is on fire. Who cares? And so I think we get focused in this minutia. And one of my least favorite topics is around greenwashing, because I really think it's turning into a red herring for us. Doesn't mean that people aren't doing it, but I believe the market is efficient and we're quickly sorting through who's actually doing things from who's not. The antidote to greenwashing happens when everyone writes their own report card and you grade yourself however you want to. The antidote is we need the same report card. Mm-hmm. So we were part of a group of LPs and GPs globally who spent about 9 months during Zoom locked in very painful Zoom calls saying, we're not going to solve ESG data, but we need to sit down together and at least decide on a few KPIs that we will track with the exact same definition at the same time of year with the same financial normalization metrics. In the course of 9 months, we got to 6 KPIs, which might be shocking, but was actually great progress. And so now we have about 125 LPs and GPs have said, okay, this is not solving the universe, but we will report on these in the same way. And greenhouse gas emissions are at the core of that. And so I think we need more actual action like that. Like, let's roll up our sleeves. Okay, ESG data is a problem. Let's sit down in a room and figure out how we can get some data that's comparable, as opposed to these navel-gazing conversations around vocabulary that aren't actually helping us make any progress. And so I think a real bias to action, and action that needs to happen across, I work in a historically quite competitive industry, but it's actually one of the corners of finance where we need to be working across firms, because Carlyle is not solving climate change on our own.
I want to check whether we have questions coming through the Slido. No questions. Just check in the room. Yes, can we get a... What are the 6 KPIs?
You're going to test me. Greenhouse gas emissions, Scope 1 and Scope 2. Scope 3 is optional. Renewable energy purchasing, board diversity, employee engagement survey, injury rates, and total employment, net new hires. Net new hires. It's all on the ILPA website. It's all open source if anyone wants to go look for it.
There's one question behind. No, first of all, just for ease of geography, just on the other side of the room, just behind you. Other side of the room. There you go. Right by you. And then we'll go to...
Good afternoon, Miles Allen, University of Oxford. It's a question for all three, but particularly to Alan, of course. Getting fossil fuels out of the ground just got massively more profitable. What needs to happen for some of the additional rents from taking fossil fuels out of the ground to go into putting carbon dioxide back into the ground on the kind of scale we need to stop fossil fuels from causing global warming?
So I'll start off. Thank you, Miles, for the question. Look, there's a lot going on in the world at the moment, but I think one of the things that it highlights is we need a permanent solution, or a more permanent solution, to what we would call clean, affordable and reliable energy. It doesn't change the strategy, certainly, that BP has. In fact, I think it makes it more important that we progress, because there is a security of supply issue, but it goes with an energy crisis, it goes with a climate crisis. We need to build more energy of the sort that the consumer wants, and the consumer wants it to be clean. Now, in the short term, I suspect there will be a need to address some of the losses which will occur because of sort of the geopolitics. But in the long term, I think it supports and accelerates the need for the solutions that we're talking about. And one of the things I've learned, my background is in the trading division, one of the things I've learned is, price cycles don't last forever, they are cycles, and it's our job to sort of manage through them. So let's not be knocked off course. We want a transition, there needs to be a transition, it needs to sort of emphasize clean and reliable and affordable, and we mustn't lose sight of all of those elements. It's not a choice between those three, it's all three.
And I might add that hydrocarbons are definitely more profitable right now, but that also means they're more expensive, which means the break-even cost of renewables is more attractive. And I do think this has reignited a focus on energy independence that we haven't had as a world in a few decades, which renewables are really well suited to. But I do think that at this point, I got in a friendly argument at the cocktail party last night around someone who was adamant that natural gas was not a transition fuel. It turned out her house is being heated with natural gas. And we have to wisen up to the reality of the transition needs to be responsible, and it needs to really focus on availability, because we can't have a massive supply shock. Otherwise, we will lose all global momentum around energy. And so how do we kind of manage the responsible decline of traditional supply while we ramp up alternative supply in a way that actually balances?
Yeah, from my perspective, it's interesting because the issue of affordability is obviously one that's ever present in emerging markets. And during a period, some people in Europe or North America are quite blind to that issue. I think it's interesting how when the things hit one's own pockets here in Europe and North America, then there's an awakening to this issue of affordability. So what I do feel that this, and we're talking about before, obviously, the Ukraine situation, etc. So what I think it does illustrate the fact that we have to be less dogmatic about things. We have to be more realistic about the complexities of the energy transition, and that there are fossil fuels obviously play a role in that. And let's not use sort of oversimplifications, because what happens when you oversimplify a problem is that you become counterproductive. One of the key challenges we have in emerging markets is how to phase out coal. It's a huge issue. And to pretend that you can do that without natural gas is just A, unrealistic, and B, counterproductive. So let's be realistic about those challenges. And again, I think the fact that this energy security issue and affordability issue has hit home here in Europe and North America, I think is making it a more sort of rational discussion. Again, we all want to get to the same endpoint. It's just how do you get there quicker and more efficiently.
Just a side point on that. What about nuclear? Do you get involved in financing nuclear at all, or do you?
So
not?
we haven't historically. We have not been doing nuclear. Whether we'll revisit that in the future, we'll have to see. But
gentleman over there, and then.
Hello. Hi everyone.
Could you say who you are first of all? Sorry, just.
Oh, sorry. I'm Joe Wade. I run a creative agency, and we work a lot with social purpose kind of projects, and we also work with a lot of charities and it's kind of like through that work, I guess. I mean, it's interesting, Meg, that you think greenwashing isn't really an issue, and because I think it's a huge issue, because I'm working in the comms sector, and a lot of what we're asked to do proves a lot of companies are going out there with a kind of greenwashing message. And I mean, I also think, Alan, BP is one of the biggest greenwashers and has historically always been so, changing the name to Beyond Petroleum, having a sunflower logo. The 2050 thing is too little, too late. And I guess, BP being this huge greenwasher, I just wanted to ask, what do you invest in kind of fossil fuel projects still to this day versus what you invest in renewables?
So clearly, I sort of accept the challenge which you put to me. Clearly, I don't agree with it. We didn't change our name to Beyond Petroleum. It was a program that we had in order to introduce, more renewables into our business. We did invest heavily, but let's think about the future. So we're very clear. And people have talked about the role of oil and gas will have a role to play come 2050. So when you ask, what we're saying, we said in 2019, where we were spending $500 million, so not a huge proportion of our overall budget, that we would increase that tenfold by 2030. We've said more recently that in transition spend, 40% of our budget in 2025 would be on those transitional activities, and up to 50% by 2030. So it is an increasing proportion. I recognise, and we recognise, that, as I say, oil and gas have a role to play, probably a lesser role, and increasingly one which needs to be decarbonised. So it is changing, and it's changing, rapidly. And in fact, we've been able to accelerate that change. I mean, only last month, we said that we would bring forward our ambition. It does take time, and so 2050 is relevant. But also, we set out very clear targets for 2025. We have aims for 2030, so it's a multi-decade program. Now, I also think it's very important that we both tell people what we're doing and then get on with delivering. And that transparency theme, which has come through today, is important. And I think that's how we create confidence with investors, confidence with our employees, confidence with all stakeholders. I hope confidence with you that we're implementing what we want to do and what we say we're doing.
Sorry, I think let's just take one more question here, because we're
run out of time, so we don't have time for questions anymore, Daniel.
No time for questions?
No.
Can't we just quickly have the comment then? Yes.
I'll try and be very quick. Just to comment on the transitional aspect. I'm Wouter du Preez from, thank you. Wouter de Pre, ex-investment banker from the aviation finance world, co-managing partner of Green Star Aviation Partners. We talk about transitional capital for the non-dirty or the dirty stuff, the non-clean stuff, where everybody wants to invest in urban net zero, full battery urban air mobility. You also have 20-year-old aircraft that is might be transitioning to some SAF, sustainable aviation fuel. Do you believe there's enough appetite from endowments, pension funds, LPs, GPs, through to the DFIs to allocate their capital through to transitional capital impact, where, as I said, it might be an airline that have a fleet of old aircraft, but they're keen to transition to a newer generation, maybe have some SAF blending? And then a question on the KPI side. If the sector becomes more sophisticated and calculates and measures deeper points than just 6 broad ESG factors, does that mean that the price of green capital, debt or equity, would be coming down? Isn't that one mechanism we can achieve so that we can roll out to green opportunities faster?
They're two very good questions, but I actually think we haven't got time to answer them here. I'm going to let the panelists pick that up with you afterwards, if I may. But it's great to still have appetite for more at the end of this. And we've had a very good and stimulating session, quite a challenging session in many ways, but that's fine. That's how this should be. Thank you all very much indeed, and we will, I hope, be back in future events to judge the progress in this crucial area. Thank you very much indeed. Thank you.